Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Gene Trowbridge and Jonathan Ney, founding partners of the top syndication firm, Trowbridge Law Group, LLP, have a legal team with over 50 years of combined experience in real estate syndication and the practice of real estate securities law. Over this time, Gene and his partners in several past firms and currently have helped clients raise close to $5 billion in offerings by empowering entrepreneurs to raise capital legally. To learn more about Trowbridge Law Group, LLP, visit their website at trowbridgelawgroup.com or follow them on Facebook, Instagram, or Twitter. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Sakar Kawle. Thanks for being on the show, Sakar.
Awesome. Thank you, Whitney. I appreciate the invite and looking forward to the conversation.
Yeah, me too. It's been great to see you all over the place. We've met numerous times and over the last few years and see your success as well. So it's neat to have you on the show now and let the listeners hear your story. And but Sakar came to the U.S. to study MS at Clemson University in 1997, and after a corporate layoff, decided to pursue real estate cash flowing rentals. He methodically scaled his personal portfolio to 200 houses, mid-size apartment units, and has controlling interest in 800 units in Texas as well. He owns and operates his portfolio via their vertically integrated construction and property management company in Maryland. Sakar, thank you again for your time early this morning as well. Let's give. I want you to give us a little background on your story, getting into the real estate business. I know, I love hearing parts of people's stories because I think it helps motivate and encourage those that are listening, trying to do the same thing. And maybe even through that, you can. I know before the show, you and I were talking about just, the mental elements of getting started and some of that that I know you've worked on, and I'd love to hear that as well.
Awesome. So thank you, Whitney. For anyone, who like to kind of get started and perhaps, want to know more about real estate and what things are possible, I think my story would be very relevant to them. Like, I came to this country, as you stated in the short bio there, in 1997. Pretty much I came with no money. And in fact, you can say that I came with pretty much debt as well, So for then on to now, it's been a long ride. And, it's all about, and I think doing the right things and things like that, right? So the short story is that I had a small real estate background back home. And now, as I came through as a student and, on a student visa, and then, you're working and in your early years, you get layoff, and that layoff was kind of my sort of a shifting point where I said, hey, you know what, I have to control my destiny. At that point, when I was laid off, I was pretty much making six figures. I was a certified, like a J2E architect from Sun Microsystems and things like that. So for someone as high up the career, that can happen to you. It just kind of at a young age as you are at the time, it just throws in a whole set of uncertainties around you, saying that you have no control of, what your destiny is, regardless of, how much of a qualification or how great you can perform. And funny enough, as I was, just watching TV at the time, this was way back, I think in 98, 99. I think years date us very quickly, but at that time is when I think Carlton Sheets and Ron LeGrand are the names that you probably don't see them or hear them anymore. But those were the small infomercials that got me started, or that kind of piqued my interest as to, hey, let me see how this works. And through my entrepreneurial things that I have done back home, I have done some of new construction and things like that. And, we always had some inventory of lots back home where we invested in India and things like that. So I kind of took some inspirations from those and said, hey, let me explore this. And that's how my story started. Like many others, folks who may relate, you start with a house and you say that, hey, I think I know how this can work. And once you get that early success, you're on to like, starting to multiply and things like that. So obviously I doubled down after the '08 recession and things like that. So that's when we were buying, like, let's say whatever, 10, 12, 14 houses a month. And sometimes we would just kind of sit on them, and it's kind of sounds crazy, but that's how it has been. It hasn't been that, okay, we suddenly, kind of out of nowhere came and things like that. It's been consistent performance over probably a couple of decades now, and just doing the right thing. And if I always like to say, if I can do it, gosh, I mean, there's no reason that no one else cannot do this.
That's awesome, Sakar. It's interesting. You mentioned a couple of things there I wanted to highlight. And you said like doing the right things, and could you just say, if you could just name one or two things that the listener could put in place today that's doing the right thing, to reach that real estate success? What would you say that is?
Sure. And the context gets interesting about doing the right thing. Whether, from my shoes, it's now all about, hey, are we performing at its peak? Whether I am, doing nice to tenants, or perhaps I am, working with contractors in a cohesive way, or perhaps, we are as a team, I'm looking forward to, excelling, or how can I help my other admins around you? But for someone else, it could be very different. It could be perhaps, hey, can I analyze the properties better? Or can I look at the properties in a different way? Or someone who may be listening to this conversation, maybe taking a different exit on down the road and saying, hey, I want to go check out this neighborhood. I've been thinking about this far too long. Or sometimes things weigh on you that, hey, you don't have a good relationship with someone and things like that. It's all about, kind of getting those monkeys off of your back and kind of setting your mind and being in harmony. So there's a lot of things, like, let's say, again, going back to my position long ago, I realized that, geez, at a level that I was doing those things, I quickly realized that lenders are my key partners here.
Mm-hmm.
And that meant enhancing those relationships, whether I was, kind of proactively showing them, hey, this is what we are doing, showing them pictures and things like that. And long behold, it took me 2-3 years to kind of form those relationships. But once people understood that, hey, this person is all about doing the right things and, having that great, attitude towards, rewarding people and things like that. Trust me, I think world opens its doors to you. And that's what happened to me, that I never had issues with, let's say, the people element, whether that's contractors, tenants, and things like that. Lenders, kind of embrace you with open arms, saying, hey, these guys are doing the right things. They are, buying in right places, doing the renovations correctly. Their operations show that tenants are satisfied and things like that. So there's a lot of elements to that. And that's the fuller side of it that we have to always be mindful, that it's not a quick success. It's all about a lot of those little things and little interactions that you're having every day, whether that's all the people around you, that's, doing those right things. And again, I guess I expanded a whole lot more, but those are the elements that someone has to look at when, as they're executing these things in a right manner.
Oh, I like that. It's not about a quick success. That's so rare, right? And sometimes it even looks that way to others. I had a quick success, but they didn't see the grind that you've been doing for years, up to that point.
Absolutely.
Normally, and even going back to like, what would you say, like 08, 09, and there were times you were buying 10 to 12 houses a month. I mean, that's a lot,
That's a lot.
That's a lot to put a team like that together and make things like that happen. I'm sure you learned so much there that's been valuable in multifamily now as you've scaled. Doing larger deals now. And so, let's jump forward, a few years. And
Sure.
Now you've been a part of numerous apartment deals and value add construction and all these things. Before we get to, say, some value add specifics, I'd love to just hear just like your opinion about the current state of the real estate market and what you see moving forward, say the next 6 to 12 months.
Sure. No, I think, as the pandemic has unraveled, right? we have had record unemployment. And if we compare this pandemic with respect to, let's say, 2008, in 2008, we had a bailout of, let's say close to a billion or so, 800 billion at the time and things like that. Now we are touching trillions and trillions of dollars. So this pandemic is a whole lot bigger. And I think it has definitely played into pretty much the main street. The jobs are gone. There are some industries that have been permanently shaped in a very drastic way. So I certainly feel that you don't see the risk right away because multifamily and apartments in general tend to be sort of your lowest denominator, where you will see that, hey, people are still trying to hold on. Everybody needs to have a roof over their head and things like that. But the reality is right there is that people have lost jobs. There have been income that have been wiped out. So we have had a sort of a rosy effect of, okay, federal stimulus coming in and things like that. So we've still been somehow been able to hold on. But now if you're starting to see the latest stat in the last few weeks or so, as we record this towards, end of September, you're starting to see that the rent collections have been declining slightly. And that's where you kind of see that, hey, this may be beginning of the distress that's maybe perhaps about to come in the immediate future. And that's what I would say, that although multifamily is very resilient, but the scale of pandemic that we have had, sure, there will be other sectors in commercial, like, for example, office, hotels, and industrial. You can always say based on which market you are at, they are more, drastically impacted. But as far as multifamily goes, sure, it will be lesser impacted. And again, there's a whole sort of a discussion of you can have around what sort of asset class, whether you are in a, like a C class, B class,
Right.
or perhaps A class, things will tend to shift through all of those as well. But it's safe to say that the main street blue collar jobs that we see, unless and until we see a vaccine around the corner and we see that consumer confidence coming back, businesses hiring back again in sort of droves and things like that, it's hard to see that how quickly we can get back. So for, like, let's say syndicators, I would say if there is a heavy repositioning or, a lot of value add things that may be going on, it's safe to pause those, maybe just do cosmetic turns and things like that. If there is a way you can pause your distributions and defer them to being, like, let's say quarterly or even at a 6 months basis, it's safe to do that.
Okay. So are you, like personally, are you all buyers right now? Are you looking for deals? Are you sitting on the sidelines? What's your opinion about what investors should be doing right now?
Well, depending on the market again, right? So there's always a sort of a theory around, okay, which are cash flowing markets, and we can name the states, whether that's Arkansas, Tennessee, and things like that. There are, good bit of pockets where you can say that, hey, it's steady Eddie, the things just work. But now you come to the banner markets, like, let's say the Carolinas, the Dallas, the Austin, the Orlandos, the Tampas of the world. That's where you gotta be very careful that you're buying, mostly on a momentum play or a yield play, as we call it. Basically paying market prices, right? And that's where it gets interesting, is that, let's say if you have a dip, it could certainly wipe out years of your hard work. And so sure enough, based on the market, we are definitely looking for opportunities. But at the same time, it's not to say that, yes, we are like super hungry, so we are opportunistic. Given the right deal and things like that, we will certainly buy it, but we are absolutely not
Yeah.
in a crazy acquisition mode. That's what I would say.
Yeah. So let's talk about value add just a little bit. It's a term that we hear often, in this industry, and value add deals. And, those types of deals have been, have made a lot of success for a lot of operators over the last many years.
Sure.
And I know you're very familiar with value add, and you all have been doing that. What's your, your take on, say, value add, now value add deals? I mean, completing that type of business plan now today, as opposed to, say, 5 years ago?
Sure. And that's a great question, Whitney. value add gets interesting, right? So for newer folks who may not know, there's a huge difference between a value add versus capital improvements. Like value add would be, you'll say, okay, you're adding amenities, like perhaps it's washer dryers, Amazon-based lockers, or you're probably offering some, let's say, water-based conservation program and things like that. But the other things, as far as the roofs, the windows, or perhaps the expensive siding, or the expensive, let's say some of the landscaping, or sort of the curb appeals and things, they start to get expensive, right? That's where you have to differ. Like, for example, if we take the pandemic out of the context for a second, last several years have been very much forgiving to investors, where we had record appreciation, you had markets going up and things like that, rents were obviously going up. So you had a sort of a situation where a lot of mistakes, or perhaps some things that you would have missed during your initial underwriting, you were forgiven by the market. But now we are in a situation where I think you have to accurately underwrite the deals, accurately understand that, yes, what exactly the value add improvements we are doing, or what could be the capital improvements that are definitely needed in our business plan to get where we need to be, right? So that's where you have to distinguish that it's not a forgiving environment as we have had before in the prior years. Now it's all about, let's get our budgets right. Let's make sure we are taking the estimates correctly from, let's say, the contractors, or let's network with a few more property managers and understand how the assets will perform, what sort of rent bumps, if any, you are seeing. So you are not banking on, like, let's say, the market or the tailwind concept, as we keep talking about, that the markets and the rent appreciation that you might get, it's not there. So it's all about making sure your underwriting is correct, your budgets are accurate, and you're not overly aggressive in your assumption. That's what I would say. It kind of dovetails into a lot more bigger issues, that it's not about, hey, can I apply the paint, and can I maybe do a little bit of landscaping. It's a whole lot, given the the pandemic and all the sort of the headwinds we have, given with all the rent decreases we may see, right? So it's all about making sure that all of those things are correctly accounted for in your underwriting. Otherwise, you could be working for free in your syndication partnership that you would have, and not see that many good returns. But that's the world we live in right now.
Yes, no, you mentioned so many great things there. And one thing I wanted to ask you, you said you must accurately underwrite deals now and understand your value add. It's so true. We thought we needed to know that, all this time, but
Sure.
we understand now. I mean, it's so much more even crucial because like you mentioned, things were forgiven then just because of the market. So, if you could pick, just to, 2 to 3 things when you think of underwriting accurately now, and nailing that down even more accurately than we did, say a few years ago, what would that be? Or, what are some things that you focus more on now?
Sure. I think right off the top, as you are, let's say, underwriting the deals, I think networking with property managers, in my opinion, is a great way to understand that how the property will operate, right? And that means that, is the property management companies that you're working with, are they giving you realistic budgets? Like, are they going to perhaps charge you a bunch of fees, or perhaps are they going to charge you a lot more overhead on top of, like, let's say, if you're doing some value add improvements, or leasing and things like that, are they going to charge you more fees? So that would be one bucket I would look at, right? On a consistent value add basis, like, water savings always play a great role to your bottom line. Like, without doing much, if you can change and do the water conservations and save some energy, that goes right back to your NOI. We have seen the water savings programs give you returns in that, like, sort of around 15 months. So let's say if you're spending X dollars, through the savings, you see that, yes, you're gonna break even around 15th within 15 months or so. Those are the quick few things. And then obviously, like, let's say if you're buying a tired property, quick landscaping improvements, and instead of doing expensive retars on your driveways and things like that, if you can just seal coat and get by, those would be good improvements. So anything that you can do for a less dollar, whether that's just let's say power washing your siding to kind of get by first let's say 24 months or so immediately before you can go into an expensive let's say repainting or changing the entire of your siding. So anything that you can do perhaps to kind of weather the storm right now, and then see how things come out, and then after like let's say 18 to 24 months you want to revisit and say that okay, now I'm going to jump on some of the expensive capex improvements that I have to do. So all those things should be on the table to kind of get by right now, and then perhaps launch into perhaps a full scale capex plan that you may have had.
Scar, how do you prepare, or how were you prepared for a downturn?
Sure. So right now, we are pretty much, as I indicated, we are very conservatively underwriting, whether that means that we are probably not, accounting for rent premiums or rent appreciation in the next couple of years. So we will do that. We are pretty much focused on what the property manager budgets they are giving us. Is their payroll right? Are there sort of the contract services within there, are they correct, and things like that. So there's a lot of penny pinching going on, that making sure that we are not buying anything that's just appreciation play and things like that. It's more about just tangible improvements that you can do, so that you can definitely see the sort of the benefits and the return. So those would be key things. And then there's a whole lot more things around debt and things like that. We are definitely extremely cautious about not launching into some exotic let's say the mezzanine, or not doing anything along those lines. So those would be the highlight points that I would say.
Yeah. So, I personally believe that like self-discipline is so important. Scott,
Sure.
taking a kind of a turn here on just a few different questions, but I believe self-discipline is so crucial to success in almost any business,
Sure.
especially in ours. And I know, from doing 10 to 12 houses a month to what you've accomplished now in larger assets and multifamily, you definitely have some self-discipline. How would you speak to just gaining that self-discipline for yourself? Maybe some ways now that you're improving your self-discipline, or even a couple habits that you are just, so disciplined about that, have pushed you forward.
Absolutely. That's a great question, Whitney, and I constantly try to work on it. One of the biggest benefits or distractions you have in today's economy is your cell phone. You can leverage that to, make great calls and things like that, but you can be on it endlessly checking whatever, Facebook, LinkedIn, Twitter, and you name it, So the whole social media is in the game of kind of engaging you the whole time, giving you creative ways to notify that, hey, this NFL team has scored great, or perhaps this quarterback just flung in like 350 yards last night. Oh, go check it out, and then suddenly you'll get distracted. So controlling your distractions is one of the biggest ways, I would say, right at the top. Then of course we can talk about improving yourself, whether that means that you're reading books, you are listening to podcasts in a quick way, you are networking with people. And to me, I think the people element is great. I love this medium of podcasts where you and I can speak, we can network with other investors, and kind of gain the knowledge what's working for other people that we can apply to other and things like that. Those would be like the huge ways. And then it's also about just not about the knowledge. You got to take care of your mind and body, right? So I exercise twice daily at this point.
Wow.
Whether that means, and it's not anything crazy. Honestly, Whitney, it's, just maybe 30 minutes in the morning. If I can get in like 25, 30 minutes in the evening as well. So I don't go super crazy, but that keeps you the vitality, right? And those are the quick habits, I would say that, there's a whole lot more we can talk about, but being self-aware. I always like to, if I can throw this out there, learning, and I basically LEARN is where I always like to kind of hone in, is listening and introspection to yourself. You would be having the empathy, understand what's happening around you. Is that effectiveness, is your attitude, your aspirations and things like that. R is resilience, like getting back into things and not let the failures go by. And N is the new targets, the newness, what can you do? How can you network? How can you get? So I always, in my mind, I'm always like, can I learn more? Because that's, as famous Jim Rohn says, that you cannot exceed yourself behind your, more things that you can learn by yourself. I mean, that's not the exact, the probability, it escapes me, but you can never sort of overtake yourself than your mindset and your go and your sort of your attitude. So those would be the quick things I would say for
No,
people
that's
who are
good.
looking.
Yeah, that's really good. What's a way that you've recently improved your business, your syndication business, that we can apply to ours?
Sure. So we recently moved into, a structured portal to have all our investors. So that's the first thing we did. That simplified a lot of, like, let's say, the PPM signings and you having all documents. So that's centralized. That would be kind of the systems way of things that you can centralize. And of course, we have the CRMs and things like that as well that, help us do things in a more effective way. But on a more, I think, tangible basis, or things that can give you an edge or can go to your next level, it's always the people element. It's always networking with folks, understanding what's happening, staying current. It's really the people element, making great friendships. Those would be the quick ways you can, you can have great people. I always like to say that, boy, you can fix a lot of assets and do a lot of things, but if you can have great people around you, it's not about the money, it's not about all the bling and things like that. It's that harmony. It's that, hey, I know these 50 people, I know these 100 people, I've networked them, I've met with them, I love what they're doing, I've seen their kids, I see how much success everyone has. That's what keeps me excited. It's not really the money or anything like that. It's really about helping people and going to that next level. That's what I love about everything.
What's your best source for meeting new investors right now?
Sure. So I network a lot, so that would be my number one goal, sharing stories with folks, and, participating, let's say, in the meetups or conferences. That has been very helpful to me. And to me, it's more about natural attraction than, for me being out there on every single podcast or every single social media post and things like that. Is the authenticity that draws folks saying, hey, this is somebody who has done and has a successful real estate portfolio of its own, and is also now doing the syndications. As you know, I have my own podcast, so that brings in a lot more newer listeners. So
Sure.
people listen to premium cash flow podcast as well, so that has been a good source as well.
What's the top one thing that's contributed to your success?
I would always say that it's networking with people and learning that there are multiple truths in this world, saying that you could be right, but there are five other things or five other parallel ways or as well that are right. So being open to that and accepting those ways, and kind of submitting yourself that, hey, there is a better way, or perhaps there are other ways as well. So sometimes, as many things that I have done, I have kind of fallen in a trap also, where, hey, I've done this 20 years. This is how I know, and this is how it works. Well, guess what? There are five other ways that deals are happening and people are making it work. So that's the way I would say that: keep an open mind, understand how things work, and that's what I would say. It's not one trick at all. It's all about relationship and the acceptance of multiple ways and truths, basically.
How do you like to give back?
Oh boy, I am always networking. I'm always trying to help on a tangible basis. I'm here in Maryland, in the Baltimore vicinity. Years ago, we did not have our social, group so we formed a 503C, I guess, the organization, nonprofit organization through which we basically on a year-round basis. It's a cultural organization. We, get together, celebrate our festivals and things like that. Via that medium, we will donate to, let's say, a horse farm or the homeless societies and things like that. I personally, since I'm operating a portfolio, many times when tenants have hardships, I will just forgive their rents. We
Sure.
have had students where we will say, hey, you know what, you're in Portland, you're from Portland, you're in Baltimore. So I love to help in many different ways as I can. Less is more for me at this point.
Sakar, thank you again for your time with us today. We're grateful just to hear your story again and just your success. Congratulations again. And I know it's taken a lot of self-discipline, a lot of work, a lot of effort, consistently over, many years. But just grateful to hear your opinion of the current market and just value add in general and ways we need to be just looking deeper in our underwriting and understanding the value add component, but then just focusing on networking and learning. I just enjoy that very much and grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Sure. So people can learn all about me. Our company is Premium Cash Flow. You can find information there as well. So premiumcashflow.com would be the place. There we have news articles. As I mentioned, we have our own podcast as well, where we are interviewing a lot more listeners. So all information is there. If folks want to just drop me a message, I would be at info at premiumcashflow.com. Or if anybody has any interest in what we are doing, all the information is there. So log on to premiumcashflow.com and you can find all about us right there.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.